Hello everyone. So we are recording a video after a long time. So this is a study on a monthly chart. You can see these blue dotted lines. That is the January of every year since 2004, which I have marked here. And I call this study a January effect. So this is my personal observation. I don't know if someone else also must have published somewhere, but this is my personal observation. So if we see in January 2004, Nifty had made the high of double one to 1.75 and the low of 1052. Okay. Now this low, like in February, we closed above the high of 10 to 1.75 and we closed at 1142 in February, which was a close higher than double one to 1.75. And after that, next 2 months we remained sideways, and then finally in April, in May we broke the low on closing basis of the January of 2004. So low was 1052, which was finally broken on closing basis in May. Sorry, in April, yeah, in May. And then after that, the market remained down. So what we saw is in January, the market went up. It remained sideways. It finally removed the low of January, and then market remained down, and which eventually ended up almost at the same price in December of. So basically, the year was sideways. Okay. So similarly, in 2003, sorry, that was 2002, not 2004. So in 2003, the low was 1026.20. Next month, the candle was within the like the February candle was within the January candle. And then in March, we broke the low on closing basis. So the low was 1026 and we closed at around 978.20. And then for 2 months, we remained down below that low and then made a new high in June. Okay, so the January low which was removed, new high was made only in June. And then we saw a rally once the January high was remained removed throughout the year. Okay, so now in 2004, the low was 1756 and which was removed on closing basis in like it didn't close in March, but yeah, it was somewhere there, 1776. But then in May, we made a big spike down. And then if you see in September, I think, no, on November, we removed the high. And then December, we closed around the highs of the year. So the the January low, which was actually removed in May on closing basis, but we had very similar closes, like around the low for previous 3 months, and the high was not removed, so we remained lower till almost August or September. Sorry, October or November, and then we closed on the high. Then in 2005, the January low was 1894 and the high was 2120. The January low on closing basis, wait, that was 1894, right? Yeah, was never removed. This was 1902 in April. The close was 1902. And again in June, we removed the high and closed above it, and then we remained higher. So this is the second time that we have closed in June. We have made a new high. Like basically, we have removed the January high. Okay. Then in 2006, we went above in February itself, and then we had a little correction in May, but we were still above the January high. We were still closing above the January high, and throughout the year, we remained higher. Similarly, in 2007, the January high, the low was taken out next month itself in February, and then we saw some sideways action, and then again a new high was made only in in May. So this is the third time we are making a new high in May, June, once the low was removed. Now in 2008, the January low market closed below the January low in May, and after that we just kept falling further, and the whole year remained lower. In 2009, the January high was removed, and then we kept rallying throughout the year. So see how important the January high is playing again and again. Till the time January high is not removed on closing basis, like almost in last since 2002 to 2009, we have seen till the time January high was not removed, the market didn't rally. Only once it had failed. Otherwise, market didn't rally till the time January high was not removed on closing basis. Now in 2010, again we removed the January high on closing basis in March itself, and then we kept rallying throughout the year, and we closed almost towards the high point of the year. In 2011, the January low was removed in February itself, and throughout the year we remained lower. Then in 2011, no, 2012, the January high was removed in February. Market kept perpetrating the January low, and then we closed at the high in 2013. Now in January 2013, market removed the January low next month in February. We remained lower. We didn't close above January high till almost June, July, August, September, October. We closed above it. Till then, we were below it. So once the January low is removed, we are seeing either it's making a new high in May or in September, October. Okay, this is the second time it has happened. Now in 2014, the January high was removed in March, and throughout the year we remain high. So one more observation over here is if the January highs are removed immediately in February and March, we are generally seeing a very good rally throughout the year. Okay. Then again in 2015, the January lows were removed in, I think, April on closing basis. I think we removed it in here in April. Sorry, it is not close below it. Sorry. So in August we removed the low, and after that also we remained lower throughout the year. Then in 2016, the January low was removed in February itself, and then we saw a new high in May, again May. So we didn't stay lower throughout the year, but a new high was made only in May. So once January low is gone, we are not making a new high at least till May or June. Okay, so and then second is September, October. If May, June, if there is a downward trend which is continuing, then we're making a new high only in September or October. Again in 2017, the January high was removed immediately in February itself, and throughout the year we remained bullish. Okay, then let's go further. Finished till 17. Okay, now where's 2017? There's 19. Okay, 2018, January low on closing basis was removed in March. Then we made a new high in July this time. So not May and June, but this time we went to July. So in last 14 years is the first time we made a new high in July instead of May or June. But after that, market remained sideways throughout the year. We didn't rally. Then in 2019, we removed the high in March. The market dipped a little, but again closed towards the high point of the year. And again, this was not a big rally after removing a high in Feb March. Generally, historically we have seen if January lows highs are removed in February and March, we are seeing a very strong rally. But in 2019 it was exceptional. We just saw a more sideways movement. Then in 2020, so we can also see that there is a immediate effect in 2020 that as soon as January low was removed, we saw a very big crash. So like probably that could be a reason where we didn't see a much rally. That is again an assumption. I don't have any kind of study behind it. That the observation is telling me probably that could have been a reason that next year itself we saw a very big crash. Then in 2021, the January highs were removed immediately in February. I think we closed higher in March, and then we saw a rally throughout the year. Now it is 2022. The January low was removed in February, and throughout the year, like almost till the mid of the year, we remained lower, and we just made a new high again in November again. So the September to November over here, and it's around. If there is a rally continue, I mean, if there is a immediate move up, then it is again in May or June that we see a new high. So here again we see it around October. And now this year we have removed the January low. Okay, we have removed the January low in February itself. Now coming months will be very crucial. If we continue to downtrend, we may go further down, or if we kind of go sideways from here, we may see a new high in either June or September October. So it's May June or September October, somewhere there we can see a new high. So currently, trade very cautiously as per what we have seen historically. Once the low is removed, you have to be more cautious. If the high was removed, we could have been a little more aggressive.